Hi everyone. Can you hear me? A second. I'm just waiting for the people to tune in as well. Right. Sure that everything is working perfectly. Right. This is simply tuning in. Okay. Everything seems to be working. If you can read this, kindly let me know in the chat room. Thank you for coming in. Thank you for logging in. I just want to be sure that you can hear me. So we'll be starting shortly. If you cannot hear me, I just want you to type in the chat room to let me know that sound is working, video is working. Let me check my viewers again. One minute. Of course. But yes, okay. Thank you. Cancel zero. Okay. Thanks. Alex. One person have responded back that they can hear. Thank you. We're gonna be starting any moment from now. Just waiting for any newbie in the house. Any newbie in the house. I want to know how best I can structure the training. Okay, I will send the link. I think some people have been joining in for one reason or the other. Let's see how best I can send the link for them. I'll double check the link as well to see if everything is working. I'm actually checking on my other system to see that everything is working. Okay. I'll double check the link as well to see if everything. Yeah. So I'm 100% sure that the link is working. The next thing I want to do is put the link in case you're having trouble. I've checked the link. You should be able to get through. Please, is the link. Okay. Guys, if you can all hear me. Okay. Right. I've got about 10 viewers in now, and I want to be 100% sure that just before I start, that everybody can hear me. So if you can type 1, I'll be 100% sure that you can all hear me. Thank you for tuning in. Cancellero, I want to see how best I can see you all. There's a way in which I can see people in 1 minute. Right. Thank you, Sangita. Can you see my screen? Computer typed 1. So it's in your hand now. I just want someone to let me know that they can see, they can hear me. I like the painting on the black wall. No, just your face. Okay, we can see you only. All right, so let's do screen share. You can see most probably if you can see my screen. Okay, so I'm just gonna begin. Can you all see my harmonic scanner? Nope, I can see your screen, your face. Yes, but not the screen. Okay. You should be able to see my screen now. You should all be able to see my screen now. Okay, thank you, everyone. Right, so good evening, everyone. It's 10 minutes past the hour. My name is Bola Balogunye. Presenting on IML on behalf of the IML team entirely. I would like to say good evening, good evening, good evening. It's a bright, sunny day. And I know majority of us could have possibly be out there watching the sun and enjoying our day, and you've managed to take your time to be out here. Thank you so much for coming. I mean, I know we've got things to do, but thank you so much for coming. Thank you. So without further delay, I'm gonna begin. First thing first, a little bit about myself. Some of the people that I've met physically, a little bit about myself. My name is Bola. As I've said, I've got about 12 years plus experience in the financial market space. My journey began 2006 June precisely, so it's been 12 years in a couple of months now. I'm so opportuned to be here today, to be able to share ideas, to be able to present to you, to be able to learn from one another. You know, I do not see myself any way better than you in any form. I kind of begin like you a couple of years ago, and it's been a very, very exciting journey. If there's one thing more than anything else that you really want to do with your life when in terms of freedom, I would say trading is can be number one. It's quite lucrative. You get rewarded handsomely in as much as you know what you're doing. And the first thing first that I tend to teach anyone when it comes to trading and my teaching is risk. Majority of my IML group that I've managed to share training with know that risk is number one paramount issue when it comes to me teaching the financial market or the forex market. So so basically this is a harmonic scanner on IML. But the first thing I will employ everyone to do is I want to know how many people are new here, how many people hasn't got any forex experience at all. I want to know. I've got, let me see, I've got about 12 viewers. Out of the 12 viewers, I want to know, oh sorry, I've got more than 12 viewers. Wow, it's quite big now. About 24 people are on now. I want to know how many people are new here, so that before I start saying the jargons and start using so much of terminologies that may be a little bit difficult for people to understand, I want to know precisely how many people are new, how many people are just getting themselves into the world of trading, how many people hasn't done anything in trading before. I want to see everyone who is new to just let me know. So Robert is new, Olu G is new, no idea at all. Okay, right. Who else is new? I've seen 2 people so far so good that are new. Okay. Yes, only one way can select. That's about 3 people. Right. I'm gonna do this in percentage wise. That's four people, 4 new people. And okay. 1 month. So that's 4, still 4 people are new. Okay. Right. So 4 people are new. Out of those 4 people, I would say welcome, 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 welcome if you are new. Okay, someone just registered last Friday. Well, the one thing that I want you to understand first of all is in anything in life, in anything at all in life, in any venture, in any business in life, in anything at all in life, you will have to have a little bit of effort and due diligence. Okay, that's about 5 people that you need to put in place for anything to work. Even if you're going to start to drive and you've never driven a car before, so you have to be able to have a little bit of effort, a little bit of skills that you're going to employ to make it work. So I want you new people to understand that you are coming into a new world entirely, and the world is completely just different to what we used to know. But notwithstanding, it is no different to life. I see trading as life. And the moment you start to see trading in that kind of a direction, then things are going to be a lot more easier for you. If you are at the event yesterday, I would say thank you for coming to the event. I believe that event was able to open your eyes widely in terms of the other side of the business. And now this is the main part of the business where majority of the people are interested in. And that is what I want us to share as well. The networking bit and part of it as well. The trading bit and part of it as well. So if you can combine the 2 of them together, which is a 5.3 trillion market with the 180 billion a year market, 5.3 trillion daily cash market together, then that's how you're going to realize that you have a powerful tool to your hand. I mean, I see this as a social trading platform. This is completely missing from the way that we trade in the institution, but it's a new thing that's stepping up, that's coming up. And this new thing that we are seeing these days, I'm so happy to be part of it, and we'll try my best to help us. And at the same time, I will see how best we can all push our business and going forward. So the new people who are here, if you don't know anything about risk at all, this is the #1 most riskiest business in the whole wide world, okay? And the risk is the only thing that you can control in this business, okay? And this is the way that I do it, yeah? If you are new, don't rush, okay? You are on a path. Be ready to invest at least 1 year of your life in learning this, yeah? If you are so dedicated and you can grasp it in about 1 month, well, you are one of the lucky few, and it all begins from doing it right, okay? If you are so dedicated and you can grasp it in 1 month, you are one of the lucky few, I will repeat, and it all starts from trying to get it right. And the first thing that you need to understand when it comes to this business is looking at your trading account in monetary form. Yeah, right. I don't want you to start looking at your trading account in pips, because the moment you start looking at your trading account alone in pips, then you might be missing some important points when it comes to risk management. Yeah, the way that we trade is we trade everything to the letter. Yeah. So in this business, for you to be able to get hang on of it, for you to be able to trade successfully, you have to see everything in monetary terms. So say, for example, your capital in your bank account is £100. Yeah. Are you with me, everyone? If you have £100 capital in your trading account, which is your brokerage account, all you have there is £100, right? With that £100, as a newbie, if you want to be sustainable in this business, as a newbie, you're gonna have to find yourself in a position whereby you know how to measure your risk and how to make sure that your risk can work for you. Bear with me a second. Hello? Yeah. Yeah, I'm in a live class. You should be part of it as well. I'll send you the link. Yeah. All right then. Yeah, I've sent you the link. Check your it's a YouTube link. You should be part of it as well. Oh, okay, no problem. All right then, no problems. Yeah, if you can join in, thanks. Yeah. All right then. Right. So, hello everybody. Are you with me? Can you see or hear me? Sorry about the distraction. That's one of the IML members. I just want to be sure that everything is all right. That's why I had to pick the call. If not, I don't really want to be picking no phone calls during this important class. Are you with me? So I want us all to be. Can you all hear me? All right then. Thank you, Cancelero. I mean, that's one answer. I want you to be seeing everything in monetary terms. Please bear with me a second. It's a little bit hot. I just want to get my fan out to get a little bit of a cool air, and then I'll begin again. Sorry about this. Right. Okay. So sorry, I'm back on. I just need to get a little bit of a coolness in my brain. So you have to start seeing everything in monetary terms. You have to start seeing everything as cash. Yeah. You don't want to be seeing everything as pips alone, because there are also different kind of values to pips. And now we'll have some tools to share with you today so that you can get this right. Okay. All right. Right. So say, for example, if you have £100 in your trading account, if you have £100 in your trading account, the best thing for you as a newbie to do, which later on there's a step-by-step process that you need to follow. Okay. If you have a small account, there is what we call an optimum position size that you need to be able to risk on a small account for it to be able to grow quickly. But before you can, I want you to understand that everything in trading is step by step. Before you can get to start risking that optimum position size, that means you would have got to a stage whereby you understand precisely what you are doing. Okay, that means you would have got to a stage whereby trading is not new to you anymore. But if you are new and you want to start with a live account, which is not advisable immediately, at least for the first couple of few weeks, it's not advisable if you haven't done anything in trading before. What you need to do is to have a demo account and start practicing with a demo account. So if you're someone who has a full-time period for trading and you are able to do things almost every day, then you can be looking to set up a live account on the side. But that doesn't mean that you will now start to trade that live account immediately, because there are a couple of mistakes that you can do. Maybe sometimes you want to click buy and then you accidentally go and click sell. Maybe sometimes you want to put stop loss and you accidentally put a different value there. Maybe sometimes you want to put take profit and you accidentally put a different value there. Maybe sometimes you want to click certain position size, yeah, because that is so critical to our trading, and it's good if we can get the position size right as well, because the position size is the #1 account blower when it comes to foreign exchange market. Okay, so what you want to do is you want to make sure that you practice on demo first. This is not because you are a baby, but because it is essential for you to get things right. Okay, don't just think, yeah, there's a lot of money to be made in forex. There's a 5.3 trillion market out there, yeah, and that 5.3 trillion market is what is exchange every single day, right? And you think, however how smart you are, yeah, trading is no respect of ego. Okay, trading is no respect of ego. Thank you, Braze. Trading is no respect of ego. So you have to do at least demo first. If you're doing it full time, then your demo time can be a little bit limited. Okay, meanwhile, at the same time, when you're doing the demo, you can have your live account, and that live account, once you've practiced on demo, okay, once you've practiced how to do all the swipe trade and swipe coin and all the alert, Dr. Spiller's alert on demo, yeah, you can now, once you get a hang on of it, you can now start to be doing the same replication of what you practice that you know you get right on the live account. So that is very, very important for us to get that right. So for all newbies, my rule of thumb, yeah, even if you want to open a live account and you want to see how best you can get on with this, the first thing you need to do is, once you deposit your money into the live account, you can grow any account, but the smaller the account, the longer it takes to grow. Okay, are you with me? The smaller the account, the longer it takes to grow. So if you have a small account, be more than ready that it's going to take you a little bit of time before the account grows. Am I making sense at all? Right. So if I'm making sense, the first thing you want to do is start looking at your account in monetary terms. Yeah, I know there's a challenge right around the corner with Dr. Spiller, where percent daily. Okay, there's no problem with that, but you have to start thinking, if you're going to be able to make 10% daily, how much do you have in your account? Do you have £100 in your account? Have you reached £1,000 in your account? There's no any amount that you cannot start with trading, but the most important thing is not to lose or blow up your account. Is it a £2,000 account? Is it a £5,000 account? Or is it a £10,000 account? Okay, right. While I was going through my own professional trading career, if you're gonna trade stock markets, they would make sure that you have at least £8,000 in your account. Yeah, at least about £8,800 in your account to start with, right? In the institutional level, okay? If you want to trade the foreign exchange market or the bond market, if you want to trade the foreign exchange market or the bond market, then even in the institution, my first live trading account that I was blessed with started with 2,500, okay? So with retail traders, starting with £100 account is not an issue. I've done this challenge about 2 weeks ago or 3 weeks, going to about 3 weeks ago now. We started a live account of about £300, okay? The most important thing when it comes to listening or understanding someone that is sharing idea with you is you should pay sincere, genuine attention, okay? And try your best to write notes as much as possible. Pay sincere attention. If you can record, you can record. This is going to be recorded anyway, so you can still have access to it. So the account balance that you start with is important, yeah, to the amount of cash that you can literally make. But I mean, once you become proficient or once you get to a stage whereby you are now competent, there's what we call the there's what we call optimum lot size. But to be deadly honest with you, you are not yet even ready for the optimum lot size. Yeah, what you are ready for, if you are new, is what I will refer to as a 2% rule. Okay, 2% rule. You see, with this 2% rule, you cannot blow your account. The reason why you need to do a 2% rule is because you are still new in the business. You see, with me, I'm going to give it to you and I'm going to give it to you clearly, yeah, so that you don't fall or make any unnecessary mistake. Yeah? Even if you have £100 account, I want you to be in a position whereby you can grow that £100 account to £1,000 account, okay? No, it's cool. It's cool. Mr. Oluji. Right. So the first thing, yeah, you can have access to training. Right. So the first thing is the 2% rule. Yeah. If you are a newbie and you want to delve into the art of trading, if you are abiding by this 2% rule, okay, and I'll show you how it works, you will be able to preserve your account, number one. You will be able to learn how to trade. Look at what you're going to be able to do. Number one is you're going to be able to preserve your account. Account preservation. So you're not going to blow up your account because you need to take 50 trades, 50 losing trades, yeah, for you to be able to blow up your account if you're doing a 2% rule. And I'm 100% sure that on daily basis, the kind of trading opportunity that we find on the Push 1000, which is Dr. Spieler's group, we will be able to get maybe about 1 to 2 or 3 or maximum maybe 4 trading opportunities in a day, which is not bad. All right. And out of those 1 to 4 trading opportunity we have in that Push 1000 room in a day, if the 4 of them go profitable, then we are fine. If 3 of them go profitable, then we are fine. If 2 of them goes profitable, then we are fine. If 1 of them goes profitable, then we are fine. But if we are not under a 2% rule and we are taking 4 trades in a day and we are risking excessively, okay, that is the number one account killer, because you can't approach trading as gambling. Trading is not gambling, okay? If you want to do this professionally, I'm giving it to you so clearly. If you are trading, if you're going into the market, if you're going into the Forex market without you knowing what your risk is, just know that you are a silly gambler, okay? And there's nothing that's going to come out of it more than you're going to lose your account. You can be thinking to yourself that you are number one luckiest person on the surface of the earth because you make profit today. You see, when you have that inborn habit of just risking excessively without thinking about what you're doing, what you are setting up yourself for is failure. Okay. Number two is, as a newbie, you need to have stop loss. Okay. Never trade without a stop loss. That's the reason why I'm giving you a 2% trade. Do you know what 2% is going to give you? The 2% of £100 in your account is going to be what? Let's do this quickly. A1. Multiply 3.02. Right, so that will give you £2. Right, so if you have a £100 account, 2% is going to give you £2. That is the maximum you're willing to risk on a £100 account. Okay, on a £1,000 account, 2% is going to give you £20. That is the maximum as a newbie that you're willing to risk on that account. Okay, on a £2,000 account, you're going to have £40. That's the maximum you're willing to risk. Okay, on a £5,000 account, you're going to have £100. That's the maximum you're willing to risk as a newbie. Listen carefully. As a newbie, yeah, you don't know anything about this business. You don't know how to go about it. You want to deposit money into your life account. You're going to be making mistakes, taking trades. You have to be comfortable with your risk. Yeah. If you're not comfortable with your risk, there's no need to do this. If you're going to be babysitting your position and you're not going to give yourself peace of mind, rest of mind, you're going to become a junkie watching the laptop all the time, yeah, then you are not trading. You have to be able to trade with peace of mind, with comfort. You have to be able to trade and know that you are satisfied doing this. Yeah, this shouldn't really make you feel in any way more than what you are. You know, trading can be mentally draining, right? But if you do it right, and that's the reason why I'm teaching you this, that's the reason why I'm showing you how to do it right. Yeah, if you do it right, then you will be able to quickly accelerate and develop so fast, and we will be able to walk you towards increasing your risk limits. Okay, but if there's no tailored approach, like a university approach to course, like someone literally watching you and making sure that you follow that risk to the letter, you're gonna go and over risk. And the moment you start to over risk, you're gonna blow your account. And when you blow your account, you won't be able to talk to me and say to me that you blow your account. And you know what you have just literally started to do? You've started to build up bad habits. Yeah, and those bad habits are one serious habit in a trading career that is so difficult to clean up. Once you start with bad habits, you won't be able to rectify it in time. It can take you 5-10 years to rectify a bad habit. Okay, so it's better you start with a good habit, yeah, and then gradually progress from there. You see, the moment you build a profitable trading strategy, you get to the moment you can build a profitable trading strategy, okay, whereby you are comfortable with your risk and you know how the market works, and you can literally get yourself in tuned with the market. You can literally pick a trade position and know that this trade position is a high probability trading position that you are into, and it's literally going to net profit because it's high probability anyway. Then the other thing that you need in trading now will become you increasing lot size, and that's where the money comes from. All right, so wait for a second. Yeah, the way that majority of us make serious money in trading does not even begin with our own serious £100,000 account. Okay, it started with us trading for institution. Institution is going to be leveraging us with huge amounts of money, 2,500 to 100,000, 100,000 to $1 million account, $1 million account to tens of $1 million account, to people who are going to be executing trading tune of
billion account, okay? And that's how it will begin. But if you cannot manage the little £100 in your account to the penny, then believe it or not, you're not going to that next stage. You are not ready for it. And I'm going to show you how you will be able to do this, okay? So with a £100 account, the risk is 2%. Don't forget the 2% rule. That's the risk, okay? So once you get that risk at 2%, the next thing you want to do is you're going to be looking at £100 and be saying to yourself that, oh, wow, I'm only going to start trading with 2%. And that 2% now is £2. So how do I do? How do I make money? Yeah, that's a serious question. Remember, you are new, okay? And when you are new, you have to crawl first before you walk, okay? And when you, even to be honest with you, I can vouch for you that if you are still in this business within a year, you are still new. You are still new to the ups and downs of trading. If you are still, and you are doing this every single day, you are still a baby. Yeah, 2 years, you are still a baby, but you're getting there little by little. So what you want to do with this £100, which is a £2, is you want to try best to see that, okay, maybe in a day, I'm going to be trading, and I'm going to be trading excessively. I want to be taking maybe about 10 trades in a day. So what you want to do is, if you're going to be trading 10 trades in a day, do you know how much that is going to be for you if you're having a £2, if you're going to be risking £2? So what you want to do is you want to divide your £2 divide by 10. So that means your account is going to be what? Your account is literally, bear with me a second. So that will be B1 divided by 10. You want to take 10 trades in a day, that will be 20 pence, okay? You want to take 5 trades in a day, that will be 20 pence. You're going to be losing on the trade, okay? So say to me now, yeah, if you're losing 20 pence on one single trade with a £100 account, are you not going to have peace of mind going into any position and closing your eyes and taking trades? Of course, you're going to have peace of mind. So once you can get the risk aspect of trading right, the rest, you've almost done at least about 70% of the job. Get the risk right, and 70% of the job is done. Because now you'll be able to take any trades at any point in time. Yeah. And whether your trade goes to profit or to loss, you wouldn't have no issue whatsoever. Okay. You will still feel comfortable and you will feel good doing it. Okay. So now you're going to be looking at this and say to yourself, with 20 pence, how much can I make? And I want to be doing this full time. But remember, your account size is small. Yeah, if your account size is small, the market is no respect of anyone. Yeah, this £100 only needs to move, say, most probably depends on how much you are risking. It can move just 10 pips, and that's £100 gone. 10 pips. You're trading standard lots on a £100 account, 10 pips, £100 gone. All right. But if you're trading with caution and you are trading with a structured risk, for you to be able to understand the world of trading, then obviously you're not going to feel the pinch of losing 20 pence on a £100 account. Remember, this is only for the period of the time for you to get used to how to navigate the system for all you newbies. If this is clear enough, so how do you now go about doing it? Trading this 20 pence a point. What I want you to be doing is this. I want you to, like I said, I want you to look at your money and see it in monetary terms. There are some brokers which will literally make this £100 looks as though as it is 100 plus the 2 zeros behind it as 10,000 pennies. Okay. So this is going to look like 10,000 pence. Okay. So your 20 pence now, your so your £2 literally look like £200. That doesn't mean it's £200, but it's 200 pennies. Okay. And your 20 pence will be 20 pennies, literally. So what this means is with a £100 account, you can be executing position and know that, okay, you've got at least 10,000 pips to play with for you to just get in tune with trading. Okay. So if you're risking £2, you know that that's about 200 pips to play with. Okay. and it takes market a very long time to attain 200 pips. And to be profitable, you don't need more than 15 to 20 pips maximum risk in the market, literally, if you really know what you're doing. Okay, so that's why with this 20 pence, you can see go into the market and trade successfully and be making even close to £1 on the 20 pence. Isn't that lovely to start with? That's literally lovely, and you will protect your £100 account. Just believe that trading takes step by step before you can get there. There's no lucky way of playing this. Okay, you're gonna have to do the work, and the work is gonna end up becoming simple, and then the simplicity of the work will now end up giving you the opportunity to do what? To be able to invest more by risking the optimum lot size on your account, yeah, and then you'll be able to make more money on this smaller account. But starting, you have to start in a respecting manner if you want the market to respect you. So if you're gonna lose 20 pence and it's gonna hurt you, then I don't think you want to be a 20 pence. We literally set your mind at peace. The psychology of trading and the risk management is literally involved in this 2% rule. So risk management plus psychology of trading is embedded together in this rule. Okay, so there's no way you'll be feeling shaken when you have this risk parameter set. All right, so going forward, if I'm clear enough, if you understand my explanation as to the 2% rule, can you please signify and let me know by saying 1, by typing 1 in the chat room? Right, I'm just waiting for your comments. If you understand this 2% rule, I want this to be as interactive as possible by typing 1 into the chat room. I'm just waiting for response. If you understand this 2% rule, if you do not understand, you can type 0. Yeah, we can do that. So this will be capital. This will be 2% risk. This will be end trades. Obviously, if you're going to take 5 trades, all you have to do is just literally divide by 5. Yeah, thank you. So going forward, without further delay, yeah, what I tend to do is I tend to use a broker that supports nano lots, yeah, a broker nano lots for the 2% rule. For a small account, you have to have a broker that supports nano lots. Thank you so much, Mili Shahid. Is it 2% on each trade or 2% on all trades together in a day? All right, so for Dunamis, that is 2% on all trades together, nothing more. Yeah, this may be a little bit questioning, but this is one thing that's going to help you to do what? To preserve your account. Yeah, this is one thing that's going to make sure that you can always use stop loss. Okay, this is one thing that's not going to make you babysit your trade. Right, so if you really want to be a trader and you really want to do this as a trader, all right, to be deadly honest with you, if this is your passion and you want to be a trader, okay, you have to be able to do it right. All right, you have to be able to do it right. Thank you so much, King Will, for subscribing to our channel. If anyone is finding the information useful as well, you can continue to subscribe, and I'll try my best to put a lot of effort into teaching as much as we progress so that we can get trading right. All right, so going forward, what I want us to do is understand that we can now have a trading account with a nano lots trading account. Lot trading account, the broker that I use for the nano lot, which is quite good, is Oanda. Okay, Oanda, just for Forex. All right, so this is a broker. Oanda, you'll be able to have a platform from them. Beside this £200 account, last week, about 3 weeks ago, you start picking some trade based on the strategy that I teach. Very simple strategy combined with your harmonic scanner and web analyzer. To be deadly honest with you, you are laughing with this strategy. So the £200 account, I managed to trade it to about, I've managed to triple it based on my own experience. All right, knowing the right side of the market to go into. Out of tripling it, I've literally withdraw £200 back into my account. So I'm literally trading risk-free now. And there are a couple of other tricks that I put into place as well to make sure that I can invest safely and utilize whatever I'm investing in a sensible way. I will show you. So I use Oanda. If you need to register on Oanda and you need your account to approve, all you have to do is just send me your email address. I'll forward it to the broker. If he knows that you are from IML and you're coming from me, instead of it to take about 3 to 5 days before your account get approved, it will be approved under couple of hours. So if you send your email address later on, I will forward it to them if you need to open a nano-lot account. If you are so fine with whichever account that you're using, it's fine. All right. So but the account, the broker that I use for nano-lot is Oanda, and I'll show you the reason why I use Oanda as well. Because when you're literally making your trade, when you're literally doing your position on Oanda, you realize that you can see the amount that you're going to be risking. You can easily put your trades on and see that you're not going to lose more than 20 pence. Meanwhile, with the PIP style of trading, what you realize is you're literally giving the opportunity for MetaTrader to not let you be in control of your risk. Okay, so you'll be trading per PIP. Yeah, you can calculate the risk, but when you are seeing it face to face like this clearly, all right, then it will be a lot more easier. Let me show you what I mean. So this is the account. This is a live account. We started with a £200. Now, like I said, I've withdraw 200 back into my account. I deposited another £100 from this winnings that we've got into another account. Which is this account. I literally opened another account for hedging, yeah, and that is I open it in Hong Kong dollars, yeah, so that when I'll show you that account too. I mean, this is just exclusive for everyone that's watching and learning how to trade. I'm not doing this to prove anything, but just for you to know that there are strategies that works and literally you can make money, and in only 2 to 3 weeks we can be right. So this is the account again. As you can see, this account summary is in Hong Kong dollars, and I deposited just £100 out of the winnings from that one into this one. I have a position on pound yen. It's already make 107 Hong Kong dollars. 10% of the account was made. But yeah, we will get there. Right. So what Oanda tends to do is this. Say, for example, I know the market is closed, but let's see whether I can practicalize it for you to see. So say, for example, I'm buying some particular position. If I want to say my take profit is going to be, okay, I'm going to do it under the pound account. Sorry. Let me do it under the pound account so that I can be much more glaring, so that you can see precisely what I'm saying about using nano lots. So you can grow 100 pound account, you can grow 200 pound account, and once you have the right strategy and you just follow your strategy to the letter, you are not changing anything, winning is surely gonna come to your side. I mean, I encounter losing trade as well. You can see over here everything looks positive, but that doesn't mean that I do not encounter losing trades. I encounter losing trade, which I'm gonna show you as we progress, but my winnings are surely more than my loss. So so if, say for example, if I want to trade this now, I'll go to say buy, and I've so much love the app on the phone. So if I say 1,000 units is what I want to buy, if I want to say my take profit is 20, say for example 20, yeah, what I want you to concentrate on is this. Look at take profit. Can you see that take profit? It says if I'm trading 20 pips for my take profit, I'm literally going to have £1.51, yeah. So the balance on this account is about £302, okay. So my risk for that day is supposed to be what? 2% will be £6. All right. So £6 will be my risk. Okay. And that £6, I'm willing to divide it into 10. All right. As a newbie. So if I say my stop loss will be now what? 60 pence per trade. Okay. So if I say 10 is showing me right over here where my cursor is, that my risk is about 76 pence. Okay. So I know if there's one thing, if my stop loss is at the right place, the next thing I'm going to change is my position size. I can change this one to 800 units. All right. If I change that to 800 units, I know my stop loss with 10 pips risk is about 60 pence. Yeah. And my profit will be £1.21. And when you see it like this, clearly, visibly like this, yeah, you know fully well that you are not risking beyond what you're supposed to risk on that position. All right, just to start practicing on a live account, to start trading and make life simpler for yourself. And that's what you need to do. And you click submit, and that goes into the market. You know, if you're going to lose anything at all, you're not losing more than 60 pence. Okay. And then when you now get better, then we can start to talk about how to give you the optimum lot size. Okay. When you have a strategy. So delving into what this strategy is going to be is the next part of the class. I believe I've taught risk, and risk is resonating in our ears right now. And then we are looking at it, and we are looking at it seriously. The next thing I want to do is literally go into what I look for if I want to trade. All right. So the first thing I'll do is my charting package. So this is the most interesting part of it all, yeah. Because you'll be able to see how I analyze and look for position going forward, and I make sure that I can call them over trading. So say for example, this is the harmonic scanner, and the harmonic scanner is presenting me with an opportunity on Aussie New Zealand, for example. Right. So look at Aussie New Zealand, yeah. And harmonic scanner has given us an entry at this particular price, okay, and it's giving us a stop at that particular price, Right. So the most important thing, first of all, trading with the harmonic scanner is for us to be able to understand what the trend is. Okay. So if I'm going to do a little bit of configuration, I like to add on my harmonic scanner one of the indicator called MACD. Okay. I trade purely based on price, right? But there's nothing wrong in trading with indicators as well. And my friend Samad, I'm very sure that he will have these things for you. I believe Samad is in the house as well, and it's going to be the 3, 10, 16. Okay. I love these settings as well. I tend to use it. I'm just going to change my own Instagram for fancy purpose to that. 3, 10, 16. Okay. Please, I want you to understand this. I'm not trying to complicate anything for anyone. Okay. Dr. Spiller's strategy is absolutely fantastic. Keep that strategy. Make good use of it. If you cannot find any opportunity in the market, I mean, you've got the harmonic scanner as a tool. You can make good use of it as well. I mean, this is automated. The one thing I like about harmonic scanner is literally this scanner will scan the market and present me with all those available trading opportunities. And once it presents me with those available trading opportunities, the next thing I do is I'll just evaluate those trading opportunities and see whether they are ripe enough for me to take. So the next thing I'll do is put a Bollinger Band, okay? So with the Bollinger Band now, what I can tend to do is I can reconfigure my Bollinger Band to be at 34 for the length, all right? So when I have it at 34 like this, what that tends to show me is simple. I'm looking for where to buy and where to sell. I'm looking for when the market is overextended. Yeah. And when the market is overextended, I know that price will retrace. All right. So what does that mean? It means when you're looking at the harmonic scanner, yeah, you can use the harmonic scanner on its own, but you need to have a couple of levels of confirmation for you to be able to use the harmonic scanner profitably. All right. Because I've seen that some people will take trades and they will be complaining about, it doesn't go well and this and that. But the only due diligence that you need to do is make sure that you use your harmonic scanner with other indicators to just confirm your trade. Okay. I will use price as an indicator. I look for at least minimum, yeah. I look for minimum 3 to 6 reasons for me to be able to take a trade. Okay, and those are more or less like rules that we need to be following. Okay, so when I'm looking at a chart, there are a couple of things that I look into. All right, apart from going into the harmonic scanner, I'll show you precisely how my trading day begins. Then if I show you how my trading day begins, then we can now start looking in the harmonic scanner. So the first thing I want to do to begin my trading day after I wake up and I feel so nice and want to check my laptop is go and look at what the fundamentals is saying. Okay, so I'll go into Forex Factory. Yeah, that's one of the tools that I use, or Forex piece army.com. Right, let me double check how we are getting on. Okay. So when I go into Forex Factory, at least today now is Sunday. I know that on a Sunday today, there's no news over the weekend. What will that tend to do if there's news over the weekend is if I am going to have position on the way that I have position on like this, I will try my best to check what news is coming during the weekend. If it's going to be a news that's going to impact my position, then I want to try my best to reduce my position size. Yeah. to smaller value. Okay, I'll reduce it to smaller value. Instead of me to have up to 15 to 20,000, I will try my best to reduce it to lesser value. Okay, some profit into the weekend. I mean, it's good to take profit anyway. It doesn't not to take profit. Once you take profit, you know that at least you make a good trade for the week and you're happy. All right. So on Sunday, there's nothing coming up. All right. So I want to check what's going on during the entire week. So I'll say this week. And the same thing with Forex Peace Army. Please note all this down, yeah, if you need to. Then I'll go to economic calendar. On the economic calendar, I want to see what's happening for the whole week. So I'll apply settings. Okay. We get to a point in time whereby I'll be able to teach us how to trade the news and trade the news profitably. So the first thing that we're looking for is we're looking for the high impact news. All right. So at 3 a.m. on Monday, we're going to have Chinese GDP. That's a red high impact folder right there. And any high impact news, especially when it's coming from China, will literally affect some commodity currencies from Australian dollar to Canadian dollar, you know, New Zealand dollar. Will be affected by those Chinese news. And the next news is the core retail sales. Yeah, core retail sales in the United States. That's happening on Monday. All right. So tomorrow at about 1:30, there's going to be core retail sales data coming up. And core retail sales data are high impact news. They literally shows the ups and down value of the retail sales. It can measure how we consumers are spending money. All right. And one of the other big news for that particular day is the CPI quarter on quarter for New Zealand. All right. So this core retail sales are month on month, and then there's retail sales month on month as well. So what this tends to do is you're going to see right here that you have detail of the news. If you want to read what GDP is all about, if you haven't heard about GDP before, you have to do is click here. Then what you will see is it's going to open up and show us gross domestic products. So National Bureau of Statistics changing the inflation adjusted value of all goods and services produced by the economy. Actual greater than forecast is good for currency. Okay, so what we've been seeing over the last period of few years is from April 2017, we've got 6.8%. Previous forecast is right at 6.8%. We have a surprise at 6.9%. And our 6.9% previous forecast is 6.8%. We have, so it's been revolving around the 6.8%, but the forecast now is showing 6.7%, which we've seen that same value in January. You know, this happened every quarter. So now another one is happening quarter per year. So 6.7, which shows us that China is relatively slowing down, you know, when it comes to the goods and services produced in that country over quarterly. And you can see it clearly. This is the high in 2010, and we are literally slowing down, having little or no increase. All right. So with this now, we can say that, okay, that news is coming, China down. If negative more than this, then there's going to be a lot of movements in the market. Then we have on Tuesday, monetary policy meeting, BOE. So I'm not seeing the currency that's going to be affected. I know there's going to be a move on the Chinese yuan, dollars. There's going to be a move on New Zealand. Yeah, on Monday, definitely. Okay. And it's good when you can combine your trading, yeah, with fundamentals. One of the best strategy that I've ever worked over time is one. I think you need to have reason to trade. Combine fundamentals, results, plus technical analysis. If the fundamentals occur and is the direction will just be in a one way, you know, you won't see so much of it up and down that will be giving you a headache. Everything is just going to go in one way. If the result is positive or negative, if it's positive, the price is just going to be going up. If it's negative, the price is going to go down. We're going to get to that. Monetary policy meetings, BOE, Governor Carney for pound. Monetary policy meeting in Australia at 2:30. Then we have average earnings at 9:30. So I know on Tuesday is pound day and we have dollar day because Fed Chairman Powell will testify as well. So on Wednesday now it's still pound day for CPI. Okay, this is a measure of inflation and it's coming up higher. It shows us that inflation in the UK, according to the economists, they are forecasting a higher inflation target, which means it's going to be affecting our pockets. We literally going to be having lesser money in our pockets because everything will be a little bit expensive. Building permits on Wednesday as well. Federal Chairman Powell testified crude oil inventory on Wednesday and the times are there. So I look through this. I know which currency is going to be playing a major role on Thursday. I can decide to trade the news alone because easily on news you can get 100 pips. But and some people don't just like trading the news. You can have also different kind of trading style because it's a lot more riskier. You need to know which kind of news to trade. This retail sales will be one of the fantastic news to trade on Thursday, 9:30. I'll try my best to be part of this and see how best we can make some money on retail sales data. All right. And then we have CPI on card core retail sales, and that's for Friday. So I know precisely what I'm looking for during the entire week. The same thing will happen on this economic news. The reason why I like Forex Peace Army is because Forex Peace Army goes into details of more news beyond Forex Factory. But yeah, it's more or less like the same thing as well. So you see that on Forex Peace Army as well. All right, the news and the results, the expectation. What this tends to mean is the forecast is going to be the consensus of all the economists put together, and then they will come up with a forecast. The actual is that statistics that the government has put together, and that will be what we dominate. And what you tend to see is when it comes to trading, when the data comes out, the price can literally fluctuate quite a lot of pips, couple of pips. Sometimes if the result is the same, then you won't see much of a movement. If the result is not the same, pause a little bit before you see movement, and then or the chart will start encountering movement straightforward. But I mean, we will get to how to trade the news and understand how to trade the news going forward. So I'm going back to our so once I know what the economic data is, I want to know whether it's going to affect the pairs I'm trading. When I look at this particular pair, Aussie New Zealand, I know that it's not going to be affected until Tuesday. Okay. So I know by Tuesday night, Aussie New Zealand will be affected. All right. So I want to be careful when I'm going into this position. And one thing that you tend to see is this. So there's a godly pattern that's formed. Yeah, it's right around our entry. Okay. But where the problem lies is this. Price has never shown that it's coming down yet, even up till this last moment. We need to understand and see what price is giving us. Look at that. Price is making a new high. Okay. Price is going up. Price is going up. Price is going up. And over here still, price still is still going up. All right. So if we take out this high now, then we know that we're going a little bit much more higher. All right. So if price is going up like that, there's no point in fighting price. If you're fighting price, you're just going to disappoint yourself. Okay. So you have to wait for price to start to do what you actually want it to do, which is if the stop is above here, you know that literally the only thing that you are doing is selling. There are a couple of confirmations level that you can look for based on harmonic scanner. All right. So the first thing first is, where does the actual setup begins? Is at D. All right. So at D, we have this particular candle. And this candle is called what? This candle is called a gravestone doji. And it's occurring at precisely one of the high areas on the chart. We see at the modest high around there, which means we haven't get there yet, and that is closer to a stop. But the harmonic pattern, this Gartley pattern, has been formed and is completed around there. And what this pattern is telling us is we should see decline in price very soon. That doesn't mean that the moment you see the price at D, the first thing you want to do is jump for sell. No, that can be very, very suicidal, because what you can end up realizing is price can continue to go up, reach this stop loss, and continue to go up again. Okay, so what you want to do is do a little bit of analysis, and this is where your UK trading view charts come into play. All right, for harmonic scanner. So once I discuss this, then I'll now go into details of how I look into profitable strategy to trade. So if I choose this, bear me a second, I'm gonna quickly browse. Let me say this for the purpose of this particular training. Let's look for another, sorry, advanced charting. With this one now, we can literally start Aussie yen. All right, guys. I believe we are already 1 hour into our trading lesson. I'd like everybody to take a 5 minutes break. Yeah, 5 to 7 minutes break, and I'll be expecting us back at 6:22. Okay, I don't want us to have information overload. I don't want us to sit down in one particular place without moving up and down. All right, so I want us to have at least 5 to 7 minutes break, stretch our body, and then from then I will be able to continue and then carry on. So I'm going to take my own 5-minute break as well. Okay, I'm going to write in the room. It's Right. So if you do enjoy that 5 minutes break, I'm going back into a second. Yeah. So okay, so this will be much better for us. Let me see how we are doing. Right, okay. All right, so guys, gonna start again on how to look into understanding the use of harmonic scanner. Come on. Come on, come on, come on. Come on. If you're playing games, I'll just come in. Okay. What I need. Import advanced chart. I'll be able to do every single thing. This is coming out. Right, so back on everyone, back to the chart. So we're looking at the harmonic corner and how to make good use of it. So if you're paying attention to this, I believe it will be beneficial. All you want to do is go and look for that particular currency on your UK Trading View. You can come to uktradingview.com and type it right there, Aussie New Zealand, and click and expand charts. Okay, what is what we're doing right now? It's a little bit advanced, but it's good. You'll be able to learn how to look into the harmonic scanner across all time frame, because the time frame needs to sync together for us to have a profitable trade. When the weekly, the daily, the monthly is doing the same thing together with the 5 minutes, 1 hour charts, then we are nice. All right, so this is it. So looking at this, yeah, the harmonic scanner is telling us this. Can everybody see my screen? Please type 1 if you can see my screen. I just don't want to continue without being as interactive as possible. Let me see this. So we see presenting, let's see lots of people in the house. I believe people are saying, yes, thank you, thank you. Right, so going forward. Right, so this is how to use your harmonic scanner, yeah? The harmonic scanner will come with this pattern for us. And what this pattern is telling us is there's a move from X, yeah? Please pay attention. There's a move down from X to A, okay? And then there's a move up from A to B, move, okay? And then there's another move down from B to C, okay? But what tends to happen is C here now did not go below the low of A, all right? And from C to D, which is our final leg, there's a move up, okay? At D now, it's an high probability place where we can sell. That's what knows, okay? But just because it says it's an high probability place where we can sell doesn't mean we should just jump in and sell, okay? We have to look for certain parameters for us to be able to sell. The first thing first is what I can call looking for what is the major trend, all right? And I'll write it down for us, okay? So I'll go to my UK Trading View website, yeah? Once I go to UK Trading View, it's the same website as Harmonic Scanner. The only problem with Harmonic Scanner one is it's got just a little time interval. I want to see what is happening over time. So if I click here, this is the same chart. Let me make it on the what kind of hour so that you can see it clearly. All right. So it is on hourly on Harmonic Scanner. So I'll do the same thing, just put it on hourly for us to be able to see things clearly. And I'll try to draw the ABCD pattern as well. So let me say, for example, I'm starting from here. I'm going to delete that in a minute because that's not what I want to achieve. So I'll go back. This is our XABCD pattern, all right? So the X start from there, then give us the A give us the B, okay? The B comes to the C, which is a little bit lower, and then the C give us the D right there. Okay, and this is exactly the same harmonic pattern that we have. Okay, can everybody see me clearly? If we are having difficulty, let me make it yellow. Sorry, I'll make it black here and yellow filling. Okay, so that it can look at least almost the same. All right, so this harmonic pattern, let me just make some few things disappear, hide some few things. All right, okay. All right, so and this is on our hourly chart. All right, so this on hourly chart. If the first thing I want to do on every chart is look at what is the major trend, yeah, and I'll see that on monthly. 1 second, let me go to my monthly charts quickly. This is just for me to be able to pick a high probability trade, okay? For me to know that, yeah, this harmonic scanner trade is going to be high probability. What I'm going to do is I'm going to get another one quickly, expand charts. Harmonic scanner is telling me that I should sell, okay? Then I want to see whether it's time for me to sell or not. My chart is loading up. Right. I'm going to try and delete this one off it, first of all. Let me say remove. Okay. I'll go to monthly chart quickly. All right, so this is a little bit advanced, all right? This is a little bit advanced, but this is how we're going to learn going forward, because everybody one day will have to become a very, very profitable trader and a very good trader. And the earlier you start the training from now, the better. So what I have here is just a Bollinger Band, and this is what the monthly is telling me. The monthly chart is showing me categorically that the trend is down, okay? The monthly chart is showing me that the trend is down, okay? If you can hear me, can you please type okay? If you can see that I'm currently doing the Aussie New Zealand, type okay. 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 If you can see my Aussie New Zealand chart, type okay. Thank you, Sangita. Okay. Berlin Reed, thank you. Right. So going forward. Thank you. So once I go to UK Trading View, I believe you all know where I went to go and pull up these charts. Yeah, from the UK Trading View website. That's the website up here. So this is the chart now, and the trend has shown me that we are going down, okay, up to this point here. And literally right now, the only thing that we are doing is we are just consolidating, okay? And another thing that we are on is we are literally at the center. We just bounce off this Bollinger Band upper band to the center of the Bollinger Band, and then we are shooting back up literally. Yeah. So while we are doing all this, the next thing that is clear to us is despite the fact that the major trend is down, where is the swing that this price is aiming at? This want to go up to here, yeah? And when you look at it, it's quite a lot of movement to get to that place again. Here about another 260 pips to get there, or thereabout, say 240 or 200 to get to this store. All right. But the harmonic scanner is not going to go to that 240, which is going to be at 1.1200. The harmonic scanner is literally still at 1.09. It's not even going to get to 1.1200 before we see this selling coming into play that he has given us. So what we then want to say is we've known quite fully well that the trend is down, all right, but we are moving up on a monthly chart, despite the fact that the trend is down. So what we want to say is we want to know one particular area on our chart that will mean quite a lot to us, that if price goes above it, then probably will be going up forever. The first, for some time, sorry, not forever. The first place is going to be this high around over there, and we have a long way to get there. Well, as you know, in every chart, price moves ups and down. Okay, when I see a thing like this, our price is moving up, yeah, and we still have a little bit of space to get that place. And I'm looking at my harmonic chart, and it's saying to me that it's time to sell. Yeah. And if I sell, I literally want to attain target profit 1 at least, then target profit 2, then target profit 3. Okay. For me to see that the price is moving higher on monthly, yeah, and we are breaking new high, because what is this is what you look at last month. Okay. If this price is not strong enough, price is not going to move above it, okay? And we are now above the previous month's high, all right? So previous month's high, not this month, this previous 2 months high is important to me because that's where we are currently. So I'm looking at an horizontal line around there for me to know. And then I'm going to change the color of my horizontal line. This is just me personally to that, yeah? And then I'm going to look at the high of that. That's 09615. Okay. That's the high of the previous month. Then I'm going to my harmonic and 1.09. The high says 1.09695. If I write that one down, for example. $1.09695. Is it 69 or 615? 615. Yeah. So pay attention to this, please. Previous is easy 2 months high. Okay. It's a good reference point for me. If we can stay above that, then I know that we are going up. So I want to go to my harmonic scanner chart. And I want to go and look for this, which is the same thing as this number. If we're there yet, I will know if so. That's 1.096. Sorry, I'll place it there. 1.09615. Okay, and that's where we are going. 1.09615. Okay, look at we are now at 1.09660, which means we've gone a little bit above it. The entry is literally at that monthly high. Okay, and what we want to see is we want to see a way whereby price can close below this area, because currently price is pushing up. It's evident on monthly charts that price is pushing up as well. And one of the reference area we have is the two previous monthly high. 1.01615. I didn't know that that's the same entry price that we have on Harmonic scanner, but it's an high probability area. Yeah. So now I have two reasons. Yeah. The first reason is Harmonic scanner reasons to trade. One, Harmonic scanner entry at 1.09610. Two, previous 2-month high at 1.09615. Okay. If this is a little bit difficult and you don't know how to do this, don't worry. I will do my best to simplify it. Okay. So already we have two reasons to trade, but the only thing that we are looking for is price to be below 1.09615, which is our previous month's high, for us to be able to take this trade. And how do we do that? Now, I'll go back to let me quickly look at weekly, okay, and see if something interesting is happening on weekly. So I know my entry from my scanner. I've seen what monthly is saying. I know the trend is down. I know if this thing starts to shoot down, it will be good because the trend is down. Okay? There's one thing I can see on weekly is price is shooting up, and we literally want to close above this high over here. What is that high? 1.0992. Okay. Let me look for Harmonic scanner 1.09952. That's where our stop is. All right. So this is just a perfect example. So what we want to do is this. Price can be very, very convincing to go to this high. Yeah, let me remove this 1 second. Price can look for this high. That's where this price is pushing to. Okay, but if you're not looking at your weekly chart and you are not looking at your monthly chart, the moment you see that sell, you just want to push the sell button. So what you want to do is look carefully and wait now to see an opportunity to trade on a smaller time frame. And you can start your smaller time frame from, say, about 5 minutes. So this is my 5-minute chart. And this is where you're going to be able to pick your entry for your hourly chart that you are seeing on Harmonic scanner. So now you are combining all the time frame together to see what is developing. If you know about candlestick signals, then you will see clearly certain things that's going on over here. So we've got a push up on 5 minutes. Yeah, there's rejection and price sold off dramatically. Yeah, now we are pushing up again and there's bounce off. We push up, there's bounce off. Now we push off. Yeah, but you see, like the last couple of minutes of trading, they are not as important as what has been happening previously. They are equally important, but you can see also different kind of move happening around there. So this is where we are on 5 minutes. And when you look at it, you want to know what is the last high. Okay. So this high over here is our last high, right? And price move down and move up. And you can see that the only thing that we are doing on this chart is we are arranging. 1 second. Let me squeeze it out properly like that for us to see. And on a ranging chart, you're not going to do anything more than so than carry on watching what the range is doing. Because look at this. This chart is quite painful. The way that is going on, you will realize that we are grinding up higher, yeah, making a new high. Over there, we make a new high. Then we made a low here, which is lower than that. But look at this, when we push up and we see making a new higher low. All right. And this is what is called trend. Yeah. The trend to me over here is we are making a high here. Look at this. Clone. When you're seeing things like that, you know that the trend is still intact. Clone. I'm putting this all on the eyes, okay? All on a center eye. Clone. So look at here, we come down and now we make a eye. This eye is a little bit still lower compared to that. Whether it's going to be sustainable or not, we don't know. Whether we're going to push above this side, we don't know. But what we are seeing now is we're seeing something that looks like a lower high compared to that high that we have over there. And that is a clue for us that we have to wait for that. If we have this low and then we made a lower high, what we want to see is we are looking for the next lower low. Yeah, we are looking for price to literally come down and create a low that is going to be below all this low. Number one. Let me make it clearer so that easily we can see the shift. We have to see that shift to the downside before we take a trade on Harmonic scanner, and that's why a lot of people are just entering the trade wrongly. So we have a high. Look at how the high is progressing, and suddenly we have a lower high, which is a good indication. All right. So what we want to say is we want to be a little bit patient to see price coming down and break this low. Once price break this low where I have my line, then we know fully well that, okay, it looks like I say we are going down. But we need to be making a new lower low for us to be comfortable that we are going down. And most probably the next thing that we can see is we can see a retest of that low. Yeah. And the retest of that low, if we fail to come to, if we fail drastically, and how are we going to measure our failure? Yeah, this down. We will fail if we cannot come above this line or trade above this line or close above this line. Yeah, price can literally come back up and then find it difficult to close above here. Sometimes price can literally poke this line, yeah, and then the moment it poke it, that doesn't mean that you should jump in and start buying again. Just wait for the next one or two prices that can literally push price back down, because what happens is once we break a support, all this area are support region, yeah. Once we break a support like this and break it, come down, we can retest back support and it's going to turn into resistance. Okay, when that support turn into resistance, now the only thing that we are expecting, because we break this support, and that is where the trend will change as well. Once we break this support and we're seeing a retest, that retest is an opportunity to capitalize on for traders to start selling. Okay, and you have to wait for it. Once you can get something like this on a smaller time frame, we break that little bit of support that we are seeing, price comes back up to retest it, and then price is filling with different candlestick signal. It can be a doji, it can be spinning top, it can be any bearish pattern or bearish engulfing pattern of a candle that will occur around there, and price will start to come down little by little on Aussie New Zealand. So for Aussie New Zealand, yeah, it's looking ready, but it's not yet matured or ripe enough to be taken. Okay, and the one way that you can know is if you have a red candle, a big red candle. Give me a second. The first thing is you want to see that price has touched this Bollinger Band. That is telling us already that we have overextended. Yeah. The next thing is we want to see that red candle. Yeah. That's going to have a follow through. Look at this red candle. It could have been the confirmation. Yeah. But the following candle did not stay close below the entry. So even if we take this, we will end up staying in the chart for some time before we see the profit that we are looking for. But if we wait, say for example, if we wait, let me see whether 15 minutes will show me something different. If we wait, what we're going to be realizing is we're going to be taking the trade somewhere back after we've seen a confirmed break on a smaller time frame. So we're going to be taking the trade somewhere back near to 106, 109.63. And look at here. So our entry is 109.61. Okay. So we are waiting for that bearishness to set in. All right, until we see that bearishness, there's no much that we can do more than we should just be patient. All right, so this is a crypto chart. Got a little position going on there, but yeah, I don't like this. That's a 1 hour. The 1 hour we in the next couple of minutes. I'll check it out again. All right, so bear me a second. This is the reason why we're not going to take the Aussie New Zealand immediately as soon as the price gets there. We have to see that shift in trend change. Trend has to change. The trend still looks like it's going up, but now we're making a new lower high, which is indicating change of price trying to make a new high compared to here. So if this lower high kind of materializes and break the low, the immediate low, then we'll be more than happy to look for a retracement back to where those lows are, or somewhere around the lows. It can be to somewhere here. Give me a second. Let me put another line there. Loan. So we're not going to literally have any trade on the pound Aussie until we see a break down that shows us trend is changing from uptrend back to downtrend before we sell. In that case, we will be able to save ourselves off so many bad trades. Because if this thing does not do that, we can see with this trend, look at here, it's the same thing over here. This trend is literally, let me put it on 1 hour or 30 minutes even. Right, so 30-minute chart. Once you can see our uptrend scenario, which is what we are seeing here, this is literally going up, going up. We cannot just jump into that trade against that trend. Don't forget, the trend is our friend. So we have to see a confirmation of the change of trend, yeah? And there's a way to see confirmation of change of trend. The way that you're going to be looking at it is you just look at the charts and be looking for the highs, yeah? And you look for the lows, yeah? And you look for another high. If that high is lower than the previous high, we kind of refer to this as a failure area, failure to make a new high, okay? Failure to make a new high. So on a smaller time frame, we can see clearly that we've tested. Look at this. Look at the beauty of this. So we are literally moving up. We test high, Okay, we come back down, we test again, we come back down, we went to go and test again, and it's not looking like as if this 1, 2, 3 test is in there for now. But what can then happen is price can continue to go up. If price continues to go up and we've already sold this, we're going to be biting ourselves. That's the reason why we have to look for that high that is lower than the previous high. Look for a low that is closer to them, yeah, and look for the break of that low, okay? We have to have patience to be able to do things like this, and then look for a retracement after the break of the low. Yeah, that retracement won't be able to make a new high when we get it. The retracement that doesn't make a new high compared to the previous high that we have is that particular retracement that we need that's going to bring price down for us. And that's it on Aussie New Zealand. So we move forward quickly. We know that we have a trade going on Aussie New Zealand, but it's not ready yet based on our lower time frame. We look again. So this Aussie New Zealand on 4 hour is basically the same chart. But let's see. Bear me a second. Right. So now we have another setup for the 4 hour time frame on Aussie New Zealand. One thing I wanted to point out a while ago is the other reasons that we are looking for to trade this. That's setting it up. Let me forgot to show us. The Gartley pattern is how to use this indicator that we are seeing in front of us. All right, so when you look at here, you see the eye of this particular indicator right here. Yeah. And when you look at where it is on price, it's over here. Okay. And this eye compared to this eye over here is higher. Okay. But look at the indicator. So we are going higher on a gradient like this, but on the indicator, which is the relative, we are having what is called divergence. Instead of us to be going higher, we are going down. All right. So we're going down, and this down divergence that we are seeing, it's an indication to tell us that although price is going up, okay, but RSI is going down in gradient, it shows us that there's an imminent sell that's going to come into play. All right, that any moment from now, the sellers can jump in. Okay, and our most important concern is the area of how we're going to fill the area of previous monthly high. If we fill this area of entry with a red candle, which are the sellers coming in and coming in aggressively, we will be able to know that, yeah, it's time to sell. So we keep an eye on this. We have the RSI too as our third reason to sell now. Okay, so this is how you build a trading plan. Now you know that RSI divergence. But price is making a new high, and RSI indicator is making a lower high. So we have, this is the beginning of our 3 reasons to trade. So this trade is looking high probability to me personally, okay, but it's not yet ready until I see those things happening on a smaller time frame. So I look in quickly into 4-hour charts. When I'm actually looking onto a chart, I mean, I like to simplify things, okay? The first thing I saw here is the Bollinger Band 8, which shows us that price has been overextended, yeah? And look at it, anytime we have the heat on Bollinger, price kind of move down, okay? When we have the heat on the lower Bollinger, price tends to move up to the middle part first, okay? Before trying to resume to the top part. But if we can't resume to the top part, then price will go and test down the lower part again. All right, so price came down to test this lower part, lower Bollinger Band, and then price decided to shoot up to D. So at D now, we know we are looking for a probability trade. So the first thing we're going to do is where we are. Right. So we've hit the Bollinger Band, yeah, on the previous 4 hour. Now again, it's showing us that price is overextending, and we are hitting Bollinger Band again this time. And price is showing us that it's overextended. But look at the RSI. The RSI is pointing up, which is a good indication that we are approaching oversold area. But we've not yet to start to point down. And the good thing again over here is look at where we are seeing divergence now. We are not seeing divergence that we do not see on MACD on 1 hour chart. We are seeing that divergence on the 4 hour charts. Okay. So when this thing is going to go down, it's going to go down seriously because we have divergence on MACD on 4 hour charts. We only have divergence on RSI on hourly charts. So we're having a complete insight. And when this guy starts to go down, this is a high probability trade for us into next week. We're going to look into a smaller time frame to know when the trigger really occurs, and I've showed us how to see when the trigger occurs. So for everybody who is not interested in Harmonic scanner, this is how you find profitable trade on Harmonic scanner. 3 good reasons. The first reason is number one, we have what? Let me quickly do this one too. What's the first reason of taking this trade? Can anybody answer me? The first reason of taking this trade? Is anybody there to tell me one of the important reasons to take this trade? We've got 15 viewers. One of the important reasons to take this trade. So I'll write it down in case we can't answer. Harmonic scanner entry. Okay. Harmonic scanner entry. That's high probability reason. Number 2 is we have Bollinger Band, hit on the Bollinger Band. Bollinger Band hit. And you see that this trade, because it's doing the same thing on 1 hourly and 4 hourly charts, Bollinger Band 8 shows prices overbought in a way. Number 3, RSI is moving towards overbought. And number 4 is MACD divergence. MACD bearish divergence. Okay, but the price is not yet ready to move down. So we have 4 good reasons to take this trade at D. the only thing we have to wait for is when is it ripe. And some of the reasons, some of the tools that we can use to find out when it's ripe to trade is by employing a trend line on the charts. So we can put a trend line here. Give me a second. Our trend line is playing now, but don't worry. I'll get angry with it. Oh wow. The trend line literally disappear. But don't worry, I know what to do. Stop on the other area. So even if we see a break of this trend line, then that's the beginning reasons for us to start selling. All right. And that's for that on Aussie New Zealand, both on 1 hour chart and then 4 hour chart. So if I look again, and we know where our monthly number is, Euro Yen shark pattern, and it's on 1 hourly chart. So when you look at a chart like this, and you're literally seeing that a pattern that was called for did not hit the entry price, it doesn't mean that the trade is not ripe to take as well. Yeah, it's not just yet at the entry price. Okay, so in some instances we may find ourselves in a dilemma that is it right to take or not. Well, what would have make it right to take is look at here. Did we have a hit on the Bollinger Band? Yes, we do. Okay, then we have a blue candle that follows. The moment the third candle push back inside the Bollinger Band, that is our end on hourly chart. The moment the third candle push back into the Bollinger Band, that is the beginning of our entry on the second blue candle. Okay. And then what we tend to see is price, as much as it's broken, price nearly attained our oversold area. Okay, and this oversold area, another reason to gauge whether price is overextended. All right, and then price then shoots up into the middle part of the Bollinger deviations, and now it's encountering what I can call making a new high towards the target profit tree. So in this manner, this trade has already developed, okay, and it's gone. We've missed it. If you ever want to take this trade to its target profit 3, then your risk currently is going to be this. Remember, you can have your stop can continue to be over here, which is going to be about 3 pips, or you can have a risk which is going to be just below that low at about 20 pips, which is not such a bad risk, okay, in expectation for price to move forward. But what would tend to happen is we have to look into our bigger time frame again by saying Euro Yen. Say, for example, Euro JPY. Let me see. Then after analyzing this stock charts, I want to delve into what is important, and then we'll be closing very soon as well, so that some people can go and get some rest. Today is Sunday. Right. So let me see. Let me see. JPY. Right, the chart is loading up. Everyone that chose to still stay, I thank you very much for sharing this opportunity with me. While this chart load up, I'm kind of looking into doing this regularly so that we can all benefit. Right, so this is a Euro-Yen chart. So the first same force is, if we go quickly back to Harmonic now, we can see that this has gone already, yeah? And I'm saying we can take another trade to target profit 3, which is not advisable sometimes, but if we see that the trend is right, and as you can see over here, this is where I want to go through with you on this, on how to be careful, is to look for where our support and resistance is. So clearly, visibly, if I look at the bottom over here, I can see that we have some kind of support somewhere over there. 1 second. So the hourly have closed. This is a crypto trading opportunity, a very small account, and then £9 was made. Let me see, 30 minutes. Oh wow, look at that. That did trade is a problem. That's going to continue to shut down. Yeah, nothing close is the problem. We close well above anyway. Right. We go up. Let's get a shoot up. Right. Okay. So when we look at a price chart like this, we can see we have a support on Euro Yen. Look at where the price is having problem. Right on support turning into resistance, and we have this kind of a doji day, right? So what we want to see is we want to quickly go to monthly again to look at our overall trend. Harmonic scanner is telling us that we are buying on an hourly situation. What is monthly giving us? Okay, so if we look at this particular chart, price is coming down, right? Which means the pressure is on the so we've hit that trend line a couple of times. Now we are going back there. And the way that we are going back there is we have this low, okay? You have to pay attention to the chart. Look, when we go up, we made another low, which is higher than this one, okay? Then we push up again. We're making low, and all this low are still higher than this one. And then we have this month and last month that is showing us green, which shows us that, okay, although the pressure is down, but the buyers are pushing this price up currently on monthly. So we are seeing something that is funny and changing in trend. Let's see our weekly and see whether we can see a trend changing pattern, really and truly. So we move up, we come down, we have this doji, we have new higher low compared to the price is shooting up to resistant area, which is where we are currently. So we want to see price well above here and go well above that for us to be able to buy fully. Yeah, until price go above there, we won't be a full buyer. That's 103.48. But currently, HARMONIC scanner is giving us an entry. All right. So what I'm trying to say is, instead of you having your stop way below here, which is going to be about how many pips? Right. Instead of us having 81 pips, if we can have a risk of about 20 pips again, and we have a target of about 31 pips, it's not such a bad 1.5 risk to 1 reward. Sorry, 1.5 reward to 1 risk on this trade, which is not such a bad one. How are we going to ensure that we're going to maintain this low? Is going to be the next question, and that's every trader's headache. All right, so when I go down now to the next time frame, in this case, I want to try and put trend line here first. So that trend line shows me that we've broken, although we are at the resistance, that's where we can push down a little bit. I'll go back into 10 minutes to have a look. So market is closed. We are right at a resistance from this support right here. Two things can happen. You have a high, low, high, low. So we have higher lows, and then we having rejection right there. So we can see price start to come back down. But the most important tool that you need to employ in a situation like this is your trend line tools, for you to know whether price is still respecting the areas that is holding, or price will start to come down. So we have higher low, higher low. If price comes back down here and bounce back, then it's fine. But if price starts to break this down, okay, and this is where that low is, 131.12. Let's look at the HARMONIC scanner carefully. What is the low over here? You can see that the low is 131.10, which is almost around the same area. So I'm saying our stop is going to be at 131.07 region for us to be able to target 131.52. Okay. So what will tend to happen is, excuse me, we're going to have a stop. That'll be about 21 point, yeah, for us to be able to make about another 25 points here now. That's about 1-to-1 risk reward ratio, which is not bad in case of that trade, but we shouldn't forget the fact that we are literally back at the resistance area before we can carry on pushing. All right, so that's a trade on euro yen. Okay, so I believe that I've treated HARMONIC scanner to a point whereby it's a little bit meaningful, and then further training will be required on how to go on forward. If we have this trend line from this low and push it all the way higher. If we break down, if we see push that's pushing below this trend line, then we know that these prices are not literally going up again this week for now, and price wants to come down and look for this low area again if possible. All right, so that is that on Harmonic scanner. Now I want to discuss what I can call steps to look for in trading. The first thing that you need to do, that you only need to do in trading, is you have to quantify your risk in cash term. Yeah, I've shown us how to do that, and to summarize is how to take high probability trades. And taking high probability trades entail you, one, have at least 3 to 5 reasons to take a trade. Have at least 3 to 5 reasons to take a trade. So one of the reasons can be the previous, the Harmonic scanner entry. B, we will now use previous monthly high, low area line. Number C, or C will be, we're looking for RSI area. So C will be, do we have Bollinger Band 8 to show over extension? Bollinger Band 8. D will be RSI divergence presence at all. And E, we have RSI divergence, and E, we have MACD 3, 10, 16 divergence as well. So this high probability setup, I'm going to try and see if I can copy it and send it into the chat room for you to be able to copy as well. 1 second. Let's see. You can have it and always make reference to the Cosmos. Yes. I don't know if, 1 second. Share screen. So copy. Let me look for YouTube. Have control room. I want to send that to you so that you can copy and paste it and keep that as a way to find your high probability trade setup. So I believe in one way or the other, we gain some today. This. Right. And we can combine this with our trading of harmonic scanner. Okay, don't mind me. So number one, quantify your risk. This has the probability trade. That's two. One. Two. Three. All right, so I've made sure that I've sent some of the things that you will look into. Doing a trade from the harmonic scanner. I believe we've covered some substantial points today. I'll be looking forward to do more of the webinars to now look into my own trading strategy that I use to pick the high probability trades in upcoming webinar. I'll say, everyone, thank you so much for joining in today. It's been a wonderful time as always to be able to show you what I look into when I trade. And then thank you so much for your time. We've spent roughly about from 5 o'clock till about 7:30, which is 2.5 hours of sharing experience and then presenting this to everyone. I hope we all benefit. I'm going to be calling it today now. I will employ us to join later on for the 9:00 from the CEO himself, Christopher Terry. Later on, early this morning, for us to see how Christopher Terry pick the swing trade setup. I would have loved to go through that, but because we have some newbies here that need to literally show what risk is all about, that's why I couldn't go through that exercise. But notwithstanding, we see how best we can carry on from here. Yeah, Tayo, I believe you missed one of the most important part of the class, but don't worry, I will see how best we can catch up so that I can quickly help you going forward. The risk is very important. We cover risk today. We cover how to take high probability trades, how to combine what we've already, how to combine what's already happening on the charts with our Harmonic scanner end, so that we're not just going to be placing our trade based on Harmonic scanner entry alone, and how to wait, how to have a little bit of patience to wait to be able to take this trade that I discussed right over here as per trend chain. But notwithstanding, we will be able to be going forward in our training. If you like what you've learned today, do not hesitate to subscribe to this YouTube channel. I think I've got 2 of them, but you can click subscribe at the bottom of the video, and then subscribe to this channel so that when next I'm doing webinar, if you'll be notified privately. Please do not hesitate to let some of your friends join this live training class, you know, all the new members and all the people who are outside that haven't been able to join IML. Just let them join for educational purpose. You know, if they find something that they like, then it will be an opportunity for you to be able to develop your network business at the same time as well. Thank you so much, Kansal Seru, for subscribing to the YouTube channel. I'll appreciate if everyone can subscribe to this YouTube channel as well. At the same time, if there's any question at all, just before we round up, yeah, we can use the next 15 minutes to treat question. Please send me your question right now. If you have any question whatsoever, send it to me. Let me be able to look into them. If we can finish treating it, we will treat it once and for all. If we can't, I'll find a way to write you a detail or create a Zoom call or Zoom meeting privately for you to be able to treat those questions. So if you have any question, please send those questions in. Thank you so much for spending the time with me this evening to be able to look into Forex trading. Thank you so much, Breeze, for that. So much appreciated. Thank you for your time. Thank you for joining in as well. Yeah, any questions, please don't hesitate to forward them now. Thank you so much, Ruth. Thank you. We'll be doing more of this as the days and was US dollar card on the list. Yeah, well, yeah, we can quickly look into US dollar card if you want us to look into it. The only thing that I'm going to do is I'll be able to give you a projection of what I think dollar card is going in the next coming few weeks. Let me quickly do that for you if you want. So, and that will involve my own detailed strategies I use to employ the market. I'm not sure if it's on Harmonic scanner, but dollar card, as we call it in the trading world, is referred to as loony. It's the way that it moves and how unpredictable it can be. Sometimes we refer to it as loony. It's quite lunatic the way that it moves. Yeah, let me close this little bit of profit that was made on. Let me see. Oh, it's not yet right close anyway. This is just cryptocurrency. Right, so I don't even have to close it because you can see I've moved my stop to break even on this little trade in there. So dollar card, I'm waiting for it to pop up. I can quickly do dollar card for you. Right, 1 second, waiting for it to come up. All right, let me try it over here. So dollar card for Cancelero, especially for Cancelero. Cancelero wants to look into dollar card. All right, so what I would do, basically, let the chart come up. 1 second. Okay, so this is dollar card. What I would do is I'll take off Bollinger Band for me to be able to see things clearly a little bit. So this is a monthly chart, okay? So with this monthly chart, I will expand. I will first of all squeeze it for us to see what this pair has been doing over time. So we can literally see that this trend is coming down, okay? We made a high, we made a market failure to make a new low, and then we shifted up. So this high, in as much as this high is above this last previous high, I will believe that and say that we are in a uptrend, okay? So knowing fully well that the trend has changed, and where does the trend change? For me, on this bigger time frame, I'll say the trend change, and this is how I will trade precisely the letter. I'll look for the eye over here. So that eye right there, that's my trend change, okay? And what do I do? Once I see a trend change and the value of, I want to know the precise value of my trend change, okay? So I'll note it down. I'll say trend change, because that would be like a pivot for me. Trend change at 1.30642. All right. So in as much as we are above 1.30642, I will be a buyer of the dollar card. Okay. So I'll be buying dollar card for now. I'll be a buyer of the dollar card. If we come below that area, then I'll be a seller. So first of all, I know that I'll be a buyer. So anything that I see that is selling in the dollar card, I will literally be buying it for now. Bear me a second, consider. Hello. So I'll literally be buying the dollar card for now. So what do I do next? So I've noted my trend change. I've known that trend has changed based on this number. I know that we are trading higher for now. Although I know that I have this little trend, yeah, but because we are above this number 130.64 I'm going to remain a buyer in the dollar card. And this is how I'm going to approach it going into the new week. So I'll look at that month, 1, 2, 3, 4, the last 4 months. So what I'll quickly do is I'll put my horizontal line on the last 4 months. This is an effective strategy. This is my own strategy that I use to approach market, and it's quite profitable. Anybody can do it. I'll take the last 4 months high and low. This is quite institutional. These are the kind of things that you will learn with professional traders, and I want to have a roadmap on every chart to let me know precisely where I'm going. I'll be able to give you targets based on this. All right, so this is my highs. I'll look for my lows now. I've done the last 4, 1, 2, 3, 4. Yeah, I'll look for the lows of those last 4 months. I'll just change the color to something a little bit dark. Do you have a link for the Christery webinar? Yeah, it will be in the IML Academy live session. So 1, 2, 3, and the 4th one is this. So I'll quickly do weekly. I look into my weekly charts and see what that is saying. So I'll look at the last 4 weeks as well. So basically, I'm making sure that I'm in sync with what the price is saying, what the chart is saying, and I have all the information 1, 2, 3, 4 that I need to make informed decision. And you see, I'll be able to go around with this little piece of information that looks little, but it is very, very robust and very, very powerful. And if you want to learn this strategy, you know who to consult. Okay, so with this one now, the next thing is just for us to know that it's time to print money, and we know which direction we're going to print the money from. So I'll show you in a minute. Don't mind me. I like to see things like this. It gives me full confidence in a directional bias of any chart. Right, it's looking colorful now. If you don't like too much of colors, just bear with me. I'm doing the high and low on every one of them. All right, so I've got that. Then I look into daily. So what you can see from here is monthly literally closed positive. Okay, you can take notes. Last month closed positive, and we closed above that trend change. This is last month, and we closed positive. Although we closed positive, we have some aggressive sellings that come to play. Yeah, that's the reason why we move from here all the way up, and then we see seller pushing it down. Okay, but we close positive above the trend chain. You can agree with me on that. All right, so I'll look into weekly now. What's weekly saying? So look at that. Look how sweet this is. So we closed, we moved up, yeah. Those sellers managed to push price back to that trend change area. That is exactly what I want to see. I want to see that they respect the trend change area, they respect it over the last 1 week, and then that last week shows us clearly that we are still standing above the trend change area, and we close green, which is a little bit positive, although not as positive as we want. So what I want to look into now is what is daily doing. So this is my daily chart. If I look at the last 4 days, 1, 2, 3, 4, I can see my last 4 days here. Price came down. Over that last 4 days, we shoot up. We have this bearing around me that is there. Okay, so our entry is gonna be based on that location right now. Okay, and I'll change this to blue. 1 second, and I'll change this to get that one right there. You don't know, I mean, there's a way that I look into price, I look into what dollar index is going to do going into next week, but I didn't get to do full analysis for you at all. But I want to trade the harmonic scanner, and I'm glad that we are able to treat it. So look at this. So basically now, I'm not going to be a buyer of the dollar card until we close above all this region coming into the new week. Okay, so I'm not going to be buying dollar card until I see, I'm going to be a buyer of dollar card above. I will be buying USD card above 1.3218 to 3224. Okay, and then my stop, if we trade above that area, my stop loss will be at least about 7 pips below 132
32.11. I'll put spread into consideration. My stop will be somewhere around there, okay? And then I will be selling dollar card. I will be a seller of USD card. Intraday, this is just intraday, yeah? Below, what is the low of the 103.149? But it's a congested zone, 103.149, okay? Down to 1, 2, 3, eye of that, down to, what is this? 103.124. I'll be very, very wary to TP1 because 103.124. I'll be a short-term seller. I'm not going to be selling this with full force at all. TP2 103.133. But overall, I want to be a buyer, and I'm going to wait for price to go above this area before I can be a buyer. So I'll try and copy this into the room for you in case you want to make use of it. Right. Okay, yeah, you're gonna give me some time to render that recording because it's a longer hour recording. It spans for over 2 hours, going to 3 hours now. Yeah, but give me some time. It takes time to render it. I'll try my best to render it, and yeah, if you forward me your email address or something, I'll try and get it across for you. So that is dollar card for me. Your stop loss on this now. Stop loss. And TP3. And BMC is trading against the trend. The seller is trading against the trend. The TP3 will be at 102.9. Give me a second. That means one price to come down to 102.9. 3046, the next one. No, 3046. So stop loss was I know I'm wrong anything above this area bar 103 2 2 4. So you can add 5 to 7 pips to all this stop loss area, okay? And that is the way that I'm gonna approach the dollar card going forward. Let me just post that to you in case you want to copy the. All right, Yogi. Thank you, Yogi. Yeah, so Yogi, this is what I'll be looking into the new week. So keep this, and then thank you so much for asking that question. I believe that clarification will make life easier for us. There's need for us to have a precise entry and exit when it comes to forex. I mean, today was just a session that I'm glad that you enjoyed it, but we will have some more greater session going into
the new week. So that's it about how to use Harmonic Scanner. And then we didn't get to treat them web analyzer because time is going, and then maybe some of you need to catch some relaxation also. So thank you. I'm going to be calling it a day. If you ever need to get in touch, you know how to find me on the WhatsApp group. Okay, you can send me an email of your chart if you want me to have a look at it for you, and then at the same time you can send me a WhatsApp of your chart if you want me to have a look at it for you. This is my email address. Do not hesitate to subscribe to our channel, and then I will see you soon. Thank you.